Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 2nd of August, 2016. This is another Trader Bite. The goal for these Trader Bites, for those who are unfamiliar, is to just provide some color and some prep, routine prep, as I've been doing for the last at least 10 years, using the same routine, as boring as that makes me sound. And the goal is just to go over the factors driving the market potentially and the possibilities for the key trades of the day. Call them hypos. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. This morning, the key news that came across is that Australia cut rates to a record low. They cut by 25 basis points, moving their benchmark rate to 1.5%. The central bank's board noted that prospects for sustainable growth in the economy with inflation returning to target over time would be improved by easing monetary policy. Now, an important thing to factor in here is that they are easing their monetary policy and combating deflation. In addition to that, on top of that, Japan released its plan for stimulus. They put out a stimulus package of 28 trillion yen. Trying to find it here, it disappeared. 28 trillion yen, of which the budget measures will be 13.5 trillion. So that should boost, they expect that to boost GDP by about 1.3% for Japan. That's a big boost there. This morning, about a half hour ago, we got the key numbers in the U.S. in the morning. June's personal income came in at 0.2% less than the expected 0.3. Personal spending, however, was higher, 0.4 versus 0.3 estimated. So what you have is lower income, higher spending. The personal saving rate came in lower at 5.3 versus 5.5. The PCE deflator came in at 0.1 versus 0.2, and the PCE core came in at 0.1 in line. Month on month, year on year came in at 1.6. That's what we've got from the overnight session. Oil is bouncing around at $40, trading $40.36 right now, up 0.75. UK's construction PMI came in pretty strong at 45.9 relative to the 43.8 expected. And then, of course, Goldman came out yesterday. Some of you may have heard stating that they're recommending selling stock, moving it to underweight. So a lot going on there. As far as what we're expecting for the day, ahead of us, we get ISM New York at 8:45 Central, 9:45 Eastern. There's no estimate, 45.4 prior, and we have no speakers. Fed Speaker Kaplan has already spoken, and the calendar is fairly clear this morning. Not much there except for the auctions. Let's switch gears here and look at yesterday. This is from yesterday's Trader Bite. If it seems fuzzy to you, it's because it was broadcast in 720p. Yesterday, the primary expectation was for a push higher towards that measured move. The expectation was for an open auction in range, chop on the open, and then a push higher to exceed the all-time high we currently have on the day session at 2171.75. Of course, the Globex session all-time high is right here. That's I'm not measuring the all-time high on a Globex basis because the S&P trades in sympathy with other products as the underlying equities are not trading at that point. But it pushed through the it pushed through the high pushed through the high and it sold off, and the expectation was it would sell off down into the 65.50 area, find a base, and then start working itself back up. That didn't quite happen. It was a partial plan. The secondary hypothesis was again for an open auction, test higher, and then start to move towards 2161. The overall hypothesis was looking for rejection of higher prices once the test is done, and for the market to start rotating lower, which we're seeing evidence of currently. Let's see what the market actually gave us. Here's what things looked like. We had a very tight open auction on the open right there. It was basically the opening swing was set in the first minute. Then we get this explosive move down into 2162 and a quarter, just ahead of that 2160.75 target that we had below. And then we start to shift up and take out the all-time high. And this looks fairly decent. There was a ton of buying pressure down here, good prints on the offer, some pretty good confluence or some pretty good aggression on the buy side all the way up. We put in this zipper here, put in a pretty odd looking high volume node, and then it explodes downwards. This was with crude oil actually to finally come down and test at 2160.75, so that's Hypo 2. So essentially, Hypo 2 starts somewhere here. This early noise here, couldn't make heads or tails of it, was not able to trade it. However, Hypo 2 kind of kicked in here, gave us a pretty decent pullback for an initial sell around mid. And then the expectation was it was not likely to make it to mid. Why? Because this is getting cluttered. Why? Because I was projecting this 65.50 forward. This was a sell spot for me. Had a pretty good rotation down for about 3 points, and then again it occurred right at mid. Again, the mid is this blue line right here, this darker blue line. Another mid test from below. However, if you recall over the last week or even longer, any tests down into the 50s, into the 50 handle, has been bought up, and the sell short setup of mid after an impulsive move has resulted in the market lingering and breaking higher. And guess what? Yesterday was a bit of an exception. It did linger, but it did pay out. It gave another 3 points or so, and then it just sat sideways for just a long period of time, for about 2.5 hours. Just sat sideways, built a lot of cortosis here on the point of control at 64.50, and then a very decent close here right at the point of control. And what I was discussing in the S5 chat room was the question that was posed at the end of the day is, what is your expectation for higher and lower into the European Open through the Asian session? My guess was higher. This was setting up as almost a W formation. I'll show it to you a little more clearly here on the 15-minute. And we've seen this type of formation a lot recently. So you can see it right here. Sell, push, higher, low, push, higher, right? Sell, push, higher, low, push, higher. And we saw it again yesterday. Sell, push, higher, low, and higher. The market seems to be fairly methodical. This one is a little bit noisy right here, higher, low, and higher. Seems to be noisy, but overnight I expected it to continue higher. And you call it lucky. Your guess is as good as mine, I guess. The overnight session showed us that exact sympathy, in that it reopened right here and immediately pushed higher. The market's been doing these making these moves that are fairly repetitive and trading in somewhat of an unorthodox way. The auction seems to be continuously interrupted and not as clean. And I've been talking about this in the Trader Bites since last Monday, since I came back from my break, that it's a good time to just be very, very picky and to minimize the number of trades you take. This is the time of year that that happens. Let's look at the point of control migration. Point of control moved up from Friday into the Globex session yesterday, moved down, and then now it's moving down again. Yesterday tested above the all-time high and found immediate sellers, an impulsive move down yesterday of about 13 points that could not recover. The overnight session attempted to push back up towards those highs, got to 71 versus 72.75. And what we have here today, this morning, based on the Globex session, is something that looks very, very similar to what we had yesterday. Remember, yesterday coming in, I said, given the way this is set up, this is likely to move lower on the open, and it did. If you look at the opening bar, it's lower. Here we are again, another setup, similar setup, point of control at the low of the range on the overnight session, higher than normal volume, higher than expected volume on the overnight. The normal volume is 200,000 contracts. We have 241,000. The point of control is at the low end of the range after an impulsive move. Again, this is likely to retest and take out this 2157.50 low that we put in overnight. However, I caution you here because if you draw a line below 2155 going back, and let's do that here a second. So that's as much as we're going to glean out of the overnight session, a multiple distribution, but more of a B shape, long liquidation. The point of control is at the low end of the range. There's energy that's been built here. The energy is likely to dissipate as a continuation move of this impulsive move down, so I'm expecting it to push lower. That's the higher probability. It doesn't mean that that's what will happen, but that's the higher probability. But take a look at how we've treated movement down below the 2155. Here, let's go back, and it started around this area here. If I draw a line, if I can draw a line across 2155 here, you'll see that every time we keep popping up, and we pop up with power. This was done on FOMC. You could see that it leaves an excess every time we have come down here, and if it pushes down in here, I'm likely to be, if I'm short into the push lower, which is what's more likely, I'm going to be looking to scale out ahead of the 2155 no matter what. And so overall, we're still inside of this high volume node. Let's move this profile forward. Hit the control key and the arrow keys on your IRT and walk this profile forward. And you can see how the volume is building. Let's clear this chart here. You can see how the volume is building on the left, on the profile on the left. See how we're filling in that upper distribution. This is becoming more and more of a normal of a normal distribution profile. And even as we push higher, well, this day changed it. Friday was very anomalous with that P. But overall, we're filling in that, excuse me, that old LVN, which I've removed from here at 60. It used to be at 64 something, 64 and a quarter. That LVN has gotten filled in. We are in the middle of the distribution here. We're trading against the point of control. Expect a fairly choppy open. Expect us to be likely stuck here. So I'm looking for a push. My primary hypothesis this morning, I'm looking for, again, at least a brief open auction, a push lower. I expect the overnight low to be taken out, and I'm looking for it to break up above the POC, chop around it, and start to move back up into the upper boundary of this. That's a terrible line. Upper boundary of this range back into the 2165 area. Excuse me. 2165, that's the primary hypothesis. That's what I'm looking for this morning. So I'm looking for a break of this overnight low. I'm looking for it to remain stuck. We're trading right on top of the MC point of control of this range. This range has started on the 14th of July with the gap up. We are super stuck here. And that's what I'm looking for Hypo 1. Hypo 2, same thing, except of course, just like I've been doing since last Monday or Monday a week ago, it is practically the opposite. Looking for a pop, a test of the prior day's point of control, an attempt to push higher, find sellers, fail, push lower, and then stay in the middle, and then look for the rally, the traditional rally that we've had over the week and a half into the close. That's what I'm looking for Hypo 2. Hypo 2, the key areas to check are going to be the point of control yesterday. The value area is valid, so the point of control all the way up to 2166-ish. 2166.50, and then a test of the overnight low as well on that auction. A quick view here, just while I have you, a quick view into the weekly. Where's the weekly? Here it is. A quick view in the weekly. Look at how it's flipping back. So we had these awful balance ranges here that started back here with the 14th. And what we had yesterday is a push out of that range and a push back in with a point of control building right where the prior where we've had this balance. So you could see that value keeps shifting upwards ever so slightly, but overall the market just does not see any value in going a lot higher and remaining up there, and it continues to test higher, push out the shorts, and then come back into balance. And that's basically the theme that I talked about last week. This is typical of a market that has been pushing through all-time highs. In addition to that, if you're following volume profiling, which is not a trading system, it's just a way of organizing information in the market, just a way traders trade it in a pit, you'll notice that, when we're in all-time highs, we're basically flying blind. And so you need to be patient here. The markets do not make all-time highs forever, of course, unless you're living through 98, 99, and 2000, where every day it was an all-time high. The ideal situation for us is we start to move back and repair areas below and start moving towards 2080-50 below to repair some of the June, or to re-auction. I don't like using the term repair, but to re-auction some of June's poorly auctioned areas below. Another thing I want to point out is this is my index chart that tracks all the products across the board, and you can see how oil is basically preceding on movement is preceding a lot of what the indices are doing. I'd love to be able to cut out some of this stuff and just show you the indices, but you can see yesterday oil just precedes the movement that later comes in. See how this all of a sudden corrects after the fact. The market tries to linger, but with oil is pulling us down overall. But there's a delayed reaction. I'm keeping an eye on oil. That's why I'm bringing this up. This chart, of course, is not as noisy because I watch it as it forms on the open, and I can see what the trend looks like across various products. And all it does is it gives me a clue as to what are the driving sectors are and what other markets are likely to drive today, and those markets constantly shift. Anyway, this has gone on for too long. I will leave you with that. I misspoke yesterday. I said that we have our public AMA this week. We don't actually. It is the second Thursday of the month. This week I have a walkthrough with the S5 traders. And so uh, we're not going to have a public AMA this week. It'll be held next Wednesday, actually, because on Thursday I'll be on Futures IO to do the third part of the education mini series for Futures IO, a valued partner. Good luck, and I'll catch you tomorrow morning. Take care.